Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Are you a new or sophisticated investor wanting to learn how to operate a successful syndication business? For life-changing training from the nation's leading syndication expert, my friend Vinny Chopra has the training you need. Text LEARN, L-E-A-R-N, to 474747. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Ivan Madrigal. Thanks for being on the show, Ivan.
Hey, Whitney. Thanks for having me, man. It's my pleasure.
No, I'm glad to have you on. We've got to know each other a little bit, and we've spoken at numerous conferences now, and it's neat to see, you and your team and doing deals and you all growing. But a little about Ivan. He started his real estate career in 2004 when he got licensed in Miami, Florida, and placed it under a local broker. In 2018, he began the management and acquisition of multifamily residential and mobile home parks. Has a strong banking experience, having been a personal banker to business relationship manager and branch manager. That has served him well in analyzing and underwriting property financials, performing market analysis, and recognizing important trends in the markets. Has now built a successful team to deal with day-to-day operations of a business and provide excellent customer service to their clients. Well, Ivan, thank you again for your time, and I know you're going to share a lot of value with listeners and myself today. But tell them a little more about who you are and what your focus is right now. And then before the recording, we talked about just this thing of positioning yourself to do this business well and what that should look like. I'm looking forward to getting into that. But first, tell them who you are.
Well, Whitney, you could have said it better. I mean, you gave me a very nice and generous introduction. But in a nutshell, I come from the banking industry. That's the majority of my career. I spent it in banking. A lot of that part was in business banking. I started to manage a portfolio of business owners, and started to get acquainted with the operations, the daily operations, the challenges that they faced, looking at financials, balance sheet, underwriting those financials to be able to provide them with services, with loans, lines of credit for working capital, cash management solutions, and things like that. And the entrepreneur bug was already in me, where I wanted to do something. I didn't want to work for the bank my entire life, even though I was making a pretty decent living. And that's when, eventually I decided to leave the bank. And fast forward a few years later, and I'm here talking at your show. And all that experience that I have has served me well.
Good. Wow. So, I can imagine in the banking industry too, like you said, having to underwrite properties there and understand financials or financial statements and things like that have come in handy, and having to look at properties and the underwriting, just the documents in general, that we need to know how to look at. But one thing we had talked about was positioning yourself in this industry and getting started as soon as possible. And I'd love for you to elaborate on why it's important to get started, as soon as possible, and then maybe some ways that we should be positioning ourselves, or thinking about as we're doing that.
Yeah. Well, when we talked about that, we all go through learning experiences in everything that we do in life, and this business is not different. And what I found is I was under the impression that once you find a good deal, which when you look at several, in our case, hundreds, and before you find one that's nice and makes sense, I was under the impression that the money will follow, that it will be no problem raising capital and having people, yeah, take my money, until I realized that it wasn't like that. Until I realized that no, if you didn't position yourself as what you're doing, you didn't let people know beforehand what you're doing, what they can expect, it's a lot harder. It could be done, but it becomes a lot harder to raise the capital you need because you only have a small window of time to get that done. So the most important part is positioning yourself as soon as possible. Even if you don't have a deal whatsoever, you get something, a sample deal from another syndicator or from sponsor or somebody that you know that do this, and start setting appointments and talking to people and tell them, hey, if something like this comes along, it's just something that you're interested, and get to and learn the ins and out of it, because people are going to have a ton of questions.
So how did you educate yourself so you can answer those? Because obviously, in the beginning, you're going to be nervous, right? You don't know what questions they're going to have, but how did you educate yourself so you can be prepared for those questions?
Well, I compare real estate syndication to any other asset class. Real estate is just an asset class. Most people don't know that you could invest passively into something like that, or they heard that they may have the notion that it's only reserved for the ultra wealthy. And they don't know that they could invest into a syndication with an operator, with a little bit of savings. And you don't have to have hundreds of thousands of dollars to do that. You could do it with a little bit of savings, as long as you have a little bit of knowledge of investing. But a lot of times they're gonna have questions as, how do I get paid? When do I get paid? What kind of taxes or taxation event is it's going to represent? It's just endless amount of questions. So the more you know about how the asset class performs, the more you're familiarized with just a little bit. If you're going to be a syndicator, you have to know a little bit about how a stock will work, because in essence, what you're doing is you're buying stock in an LLC, right, in a property. You're like a real estate investment trust, something like that, right? So if you don't have some basic knowledge of how to explain that and let people know, let the customers know, or the investors know, this is just like investing in a stocks or something that is private, instead of being something public where you go to Fidelity or where you go to a Ameritrade or something and you buy stocks into a company. This is something like that, but it's much smaller scale in a real estate business. It's an asset class.
Yeah.
The business itself is that asset. It's that building. It's that mobile home park. It's that strip center or whatever you're raising money for.
All right, so we're positioning ourselves. We've educated ourselves. Now we know how to talk the lingo, or hopefully we can answer most of the questions, right? And we're not going to have every answer yet. I mean, at this point, we probably don't even have a deal. We don't have a deal, right? That's the whole point of positioning ourselves, right? And you mentioned, we're going to start getting on the phone. We're going to start talking to these people, answering these questions, really letting them know what we're doing. Okay, right? And so, I guess what's your suggestion as far as moving then into finding that deal, or is that where, you found a partner that's working on that, or were you looking for deals as well? Or did you, wait till you had a certain investor base or a certain amount of soft commitments? What was your plan there? Or maybe from your experience, what would you suggest somebody else do?
Well, have a platform, whether it could be, whether it's MailChimp or whether, however you want to do it. If, some people handwrite it, and have those soft commitments per se from those investors. Say, oh yeah, if a deal like this comes across, I'll invest, and try to have an idea of more or less in what range would you invest. Between 25 and 50, between 50 and 75, between 75 and 100. The more you know from these investors, the better it is. So, and that goes as far as knowing whether there will be accredited or not accredited, and the more you know, the better. If you don't know that, that's fine too, but at least have some sort of idea of how much they can commit if the right investment comes across, and then you start creating your database. Like I said, whatever you choose, so you want to create it. I use MailChimp for my mail outs, and for my reservations and investors to register, I use Syndication Pro. Right, that's the platform that I'm using with from Jacob. So that's how I have my investors. I have them go into my website and log in or create a login and register on my website on that platform. So nice. I keep tab through that platform, Syndication Pro. But it could be done through anything, because it could be done. You could do it manually if you want to. if you're not the kind of techie person that you want to write trust me, I've heard of someone that actually has a notepad with names of people written down, and things like that. So, hey, by all means, you can do it any way you want.
Do they actually mail letters too? No, I'm just kidding. So, you mentioned, I liked how you said you might ask an investor like a range. And I've heard that said before too, because it's like, it's different than you say, well, how much are you willing to invest? Well, that's a lot different question than, well, what range are you looking to invest? It's like not near as much pressure. Is that what you've experienced?
Right. Yeah, well, I like to have a range so I have an idea of how much money I could raise at a particular time. Like I said, this is what I found out recently on how I'm learning the ropes of a little bit more intricate on raising a lot of money because you could raise $200,000-$300,000 without a problem, probably with the people that you know around. Friends and whatnot. But if you want to raise a lot more money for a bigger deal, you really need to have a database of people because there's always going to be those that tell you yes, but then I'm tied up here and there. I can come up with that much liquidity quickly now, or whatever the reason may be. So, and not all deals are the same. Not all investors are the same. Some investors want to keep their money tied up in the deal for 4 or 5 years, and then some might want to keep it there for longer. And the deal you might find might be a deal that doesn't have an exit strategy for 10 years instead of 4 or 5. So with that goes also knowing those investors as well. Right? So these guys don't want to be tied on a deal for 10 years, and this is a 10-year play. I'm not even going to bother. Or I'm going to tell them, hey, listen, I know this is not on you don't want to be tied down for so long, but would that be of interest? But knowing beforehand what their objectives are is also important. So
nice. So, tell me the asset classes that you all are looking at now and how you're sourcing deals.
We're looking at multifamily and mobile home parks. Those are the 2 asset classes that we look at. We send mail outs and we make phone calls. And we've gotten a lot of responses from mobile home parks back to us, owners calling us. So it seems that we keep stumble upon more mobile home parks, and I love the asset. So that's the one that we're concentrating the most on right now. And there's a lot of factors on why we concentrate a little bit heavier on that as well.
So what size asset? What size properties are you mailing to?
It's 60 plus lots. We mail to those, and we make phone calls. We personally call a lot of park owners and position ourselves as we want to buy it. We want to buy the asset, and we create a follow up and all that kind of stuff for those that are not ready at the moment.
Wow. Okay. So, and tell me, we had briefly talked about it before, just the type of response you're getting from, multifamily owners versus mobile home parks.
Man, it's incredible, but I get more mobile home park owners receptive to sell than multifamily, and that's been my experience. And say that that's the way it is. That's just my experience. And it's also, I found it a little bit easier to get across a mom and pop that owns a mobile home than a multifamily. Multifamily owner seems to be a little bit more sophisticated. They own it through corporations and things like that. And the mobile home park space is a little bit more fragmented. So I've seen that it's a lot easier. In my experience, has been a little bit easier to getting hold of those mobile home park owners, mom and pops, that've been running the parks for 20 or for 15, 20, 30 years. And it's just a lot simpler to negotiate with them. And it's not such a hype, even though there's a lot of people that are concentrated on mobile home park now, still doesn't carry that hype that multifamily carries. That multifamily seems to be like the flavor of the day kind of thing. A lot of people are pushing to buy those assets, and that what happens when you got a lot of interested parties, that tends to push the prices up.
So what are some initial things, whether it's multifamily or mobile home parks, or you can pick one or the other, but that are like an initial deal breaker, so either you're talking to a seller or, you get some numbers or you're talking to a broker, either one, but some initial things that are going to say, okay, this is not the deal for us.
There's so many things. It depends on the mobile home park.
Or
Of
maybe
course,
some things that it has to be, maybe would be a better question. Some things that have to be there, just a few key things, maybe before you decide to really dig in deeper.
yeah. On the mobile home park space, we look for parks that are in a large metropolitan area or close to it. We look at median income. It's kind of similar to multifamily. You look at the media income in the area, the population size. We like to see that there's certain amenities within that community, within the immediate, 5-10 miles around, like Walmart, Lowe's, things like that. So, and we're not in the mobile home park space. We don't like parks that are heavily involved in owning the homes. That's a deal breaker for us, unless we feel that there's a good chance to turn those around and sell them. But our ideal mobile home park is the one that the owner of the park does not own any of the houses, that the tenants own the houses, and we're just in the business of renting the lots, right? So that could be a deal breaker too. But along with that, there's so many other things that could be a deal breaker.
What is the plan if, and mobile home parks are not my specialty, but if it is a 60 unit or a 60 lot, is that what you call it? 60 lot,
lots, yeah.
And let's say there's 5 that are owned by the seller, or the current owner. Is your plan going to be to, get rid of those, or to make a plan, maybe even finance those for the current owners or residents, or is it going to be to wait till they move and then just, get rid of those or put them up for sale? How does that work?
You could do rent to own to the existing tenant that's there. You could do straight financing if the tenant is willing to buy it. A lot of times buying it will be cheaper than renting the home itself. When you structure in a way that makes it enticing for them to do it, but sometimes they don't want to. You'll be surprised if people don't want to own; they just want to rent, right? So the plan really is to initially approach that tenant that's there and try to work out a deal where they buy that from you and they only pay you lot rent, right? But if that tenant doesn't want to buy it, then of course when they move out, you try to find someone that's willing to buy it. And there's a lot of variables to that. The age of the house and things like that have to do sometimes. If
Sure.
it's a very old house, of course they don't want to buy it. So it all depends.
Well, Ivan, what's a way that you all have recently improved your business that we could all apply to ours?
Recently, we hired a VA.
Great.
We found that the amount of time that we were spending cleaning up the list that we got from the municipalities, not municipalities, but from the counties, cleaning those lists up and doing all the research that needs to be done to find their owners' information and things like that. That time we could utilize in other things that are a little bit more important. So you could hire a VA for a very little amount of money, not too much, and they could work 3-4 hours a day, or 3 hours a day, or 15 hours a week. In our case, I was just working like 15 hours a week, and then they do all the legwork. We gave them a bunch of lists broken down by county and said, okay, these are the parameters. This is what we need, and here's how you find it. Go ahead and clean this list up and just get me the properties that meet this criteria right here. The lot size and the information that I want. Everything. We gave them all the criteria, and so we don't have to spend time on that. We concentrate on the other things we do, and that's coming out. That's working out pretty good for us.
Awesome. Wow. Yeah, I couldn't recommend enough. Somebody to hire a VA. I've used them many, many, many times now. But what is your best advice for taking care of investors, maybe other than communication?
Don't just do a deal to do it. Be patient and make sure that you do the right deal. And not, in today's market, there's so much hype going on with real estate and syndications and things like that. And don't manipulate the numbers. If they don't work, don't work. So don't do a deal chasing that carrot, because you're not going to last long if you do that. The investors are eventually going to catch up and say, well, you're not doing this right, and then they're not going to invest with you again.
So I really liked how you talked about having the right deal there, where most of the time it's, well, over communicate or be honest, and, and you want to do those things, of course, but I really like how you even went back another degree and said, let's make sure it's the right deal, to care for the investors. And I couldn't agree more. Like that's going to be the best way to care for them, is make sure it's the right deal. And the communication, all that stuff should be there. But no, that's a great answer. But what's the one thing that's contributed to your success?
Persistence. You're gonna have a lot of stumbling blocks. You're gonna have a lot of just a bunch of roadblocks. There's a bunch of stuff that are gonna happen, and what had helped me stay focused is my whys, my goals, why I'm doing this, and staying connected with the things that feed my brain. I listen to a lot of podcasts and inspirational speaking. I don't even say motivational speaking, because that ties to motives. I call it inspiration speaking, which I cut that up from Ed Milet. I listen to Ed Milet a lot, and Tony Robbins and things like that, and that keeps me focused on my goal. When you have a down day, and we all have down days, we all have funky days. That happens to all of us. We all have days that we feel like, oh, crap, you want to throw that towel. Well, you got to realize that those are part of the growing process. Life is boring if you don't have difficulties. Life is boring, and you just don't grow. So stay persistent, stay consistent, and be patient, because everything comes in time. Life happens for you, not to you. So a bunch of stuff that are going to happen to you, and you're going to be like, why is this happening to me? Well, it's not happening to you. It's happening for you. Eventually, you'll find out why that happened. That gave way to something else that was supposed to happen for you in your life. So that's the way I look at every single day of my life. I look at it that way, and it helps me stay focused on my goal.
It's a choice, right? It's a choice to look at it that way.
It's a choice, absolutely.
Wow. Well, Ivan, tell people how you like to give back.
Many ways. Of course, I do charities, and I give money out to charities. Feeding America. There's a few charities that I give to, but that's just chump change. I try to find a random kind of a random act of kindness throughout the day. The other day I was at Walmart, just around the corner from my house. I got a Walmart, and when I have to run for something quick, I just go there and grab it and come back. And I literally have, like, I don't know, just a handful of items, and I get stuck behind an older lady that's on a cart, and she's taking things out. And my initial thought is like, oh man, I'm gonna be in this line forever. And then it hit me. I was like, why am I so selfish? Let me help this lady, because she doesn't have anybody to help her. So I put my stuff on the counter, and I went and helped her. And it was a good deed, because she really needed the help, and it made me feel good, and it made me feel grounded again. I was like, man, there's so much more. Sometimes we get caught up in the daily hustle and of the day, and you're in a rush, and you don't stop to realize that there are other things around you that could fill your day, right? So that made my day. That little random act of kindness really made my day.
Made her day too.
I probably did. I had like 3 people that watched me and go like, thank you for helping the old lady out. I go like, oh, it's my pleasure. It's the least I could do.
Yeah. Well,
So,
Ivan, thank you so much for your time today. I appreciate you just talking about the importance of, positioning ourselves. So, for the money before we have the deal, and how the deal is so important. And one of the most important way that we care for our investors is being patient and having the right deal. But also liked how, you've talked about how you all are marketing to sellers and mobile home parks compared to multifamily. And one way you all have recently improved is hiring a VA. That's awesome that you all are doing that. And I think you'll see that you'll start using them more hours and probably need another VA, at some point. But well, anyway, thank you again, and tell the listeners how they can get in touch with you.
well, our company website is assetlegacygroup.com. Asset, ASSET, legacy, LEGACY group.com, and they could find out about us there and register there as well, and check out everything we do in that website, assetlegacygroup.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.